Hello friends, welcome to my channel Game of Trades. Today is 23rd of January 2018, and in this video which I am making currently especially for newbies, so those guys who are very new to the market and currently they are struggling with many questions like what assets they should be trading, how they should be trading, what is brokerage, which is best broker, what is technical analysis, what are candlestick patterns, what is intraday, what is delivery based trading. That means they have a lot of questions, lot of basic questions which is fundamental to trading itself, and they need to know this before they can actually do trading. So in this video, I will try to make these questions easy for them so that they can understand it. Though originally I intended to make only technical analysis video, but then I have seen that in my WhatsApp group there are many guys who are very new to the market and they ask very basic questions like how to identify if it is a weekly expiry bank nifty, or what is the margin for taking let's say any reliance or something like that. So if I see questions like that, then I must answer them, and that's why I have started this series of videos, especially for newbies who are very much new to the market, so that they understand it fully before investing or before trading. So, guys, first a disclaimer: whatever information you are viewing through this YouTube channel is only for educational purpose, and any trade that you wish to take upon based on suggestions made here is entirely your responsibility, and I can't be held legally responsible for your profit or loss. Now, let's see. So, if you are very much new to the market, the first thing that you need to decide is what do you want to trade? Which asset type you want to trade. This is very important because we have mainly three types, which is equity, commodity, and forex. So equity is basically your stocks. So we have Reliance, we have Axis Bank, we have Kotak Bank, we have IT companies like TCS, Infosys. These are the companies which issue shares, which issue equity to the shareholders. So if you buy a share of a TCS, then you become a shareholder. You are becoming a part of company. You own certain part of company. Let's say that you have 1 lakh share of TCS, and that means you have certain ownership in that company. So that is all about equity. And if you see our TV channels, they are full of recommendations and this and that about equity market, that this is rising, this is what. So we have our indexes, we have our exchanges for that. Now commodity is basically you trade in metals, you trade in gold, silver, then there are, I mean, agro products there, dhania and all those things come under commodity. Now the third is forex. So here you trade mainly currency. So we can trade INR versus dollar, we can trade INR versus euro. So there are three different types, and this you should understand before you decide to take which asset type you should be trading. So this is the very first question that you should be able to answer before you enter trading. You have to first decide what you want to trade, whether you want to become an equity trader or a commodity trader or a currency trader. Now once you have answered this, then you should go to next slide, and there will be a different set of questions, but then this is something that you first decide. I have traded equity and commodity. I'm not trading commodity now because uh, daytime I was trading equity and then commodity at the night, so it was too much. Always I was into a trade, and that's why I thought, okay, I will at night have some good night sleep, and in the morning I will be trading equity, and that should be fine. Let's I may start some video on commodity and forex also later, but first I want to concentrate on equity. So this series will mostly be equity related, but then very soon it might happen that I may also talk about commodity and forex. In fact, as far as technicals are concerned, they are almost similar, but then there are few fine refinement that is required if we are into equity or commodity or forex. So, some fine refinements are definitely required, and this is because of the nature of the market, this is because of the nature of the asset. And there are few differences as well, so that needs to be taken care. Now let's say that we have decided to trade in equity. Now in equity we have two segments. The first is cash and then is a derivative. Now, cash is simply that you have whatever you are buying, you are buying in cash. That means, let's say I want to buy 1,000 shares of Reliance. One share of Reliance costs 1,000 rupees. So 1,000 into 1,000, that is one followed by 60, that is 10 lakhs. That is the amount you should be having. In derivatives, you are given certain leverage. You only pay margin, and you that margin is actually a mortgage. So you just provide the margin, and then you can do the trading. So derivative I will defer for some time. This I will discuss in some other videos. First, let us concentrate on cash. So cash is basically if you decide that you are going for cash market, then you can trade in. Trading types are two, which is intraday and delivery based. This is not only applicable for cash segment, this is applicable for derivative also. So here we saw that derivatives derivatives are futures and options, and they are in big topic in itself. Option is something that needs to be very taken care. I have told a lot of guys in my WhatsApp group, they don't have much experience in trading, but still they are trading in option. This is something, trading is a profession. If you treat it as a profession, that's good. Only because you see that I am making money or someone else is making money does not mean that you start trading in option. Option is something that requires a very good understanding, because it has many things attached to it. So it has money value, it has time value, there are particular Greeks that are related to it, and understanding of that is, unless you have a better understanding of that, it's advisable that you don't trade in options. I will be making a video series on options and futures later on. So this derivative part I will take care later. But then if you are trading in cash first, okay, so let's say that you have decided that you are going to trade in equity. What first thing you should do, you know the first thing is that you first be comfortable in cash segment trading. So the cash segment trading is, one is intraday and other is delivery based. First, you should be comfortable with delivery based trading. Now, what I'm trying to do here is to make a step by step way of making of transforming you from a newbie to a seasoned trader. This is how one should go ahead. First, make yourself comfortable with delivery based trading. What is delivery based trading? It is that first I will focus on intraday, because if you understand what is intraday, delivery based will be easier. Intraday is you buy and sell during the same day. You don't carry that trade. Let's say that you buy 10 shares of Reliance, and on the very same day you sell it. You don't carry it. And delivery based is that you buy today and you carry it tomorrow, a day after tomorrow. So you keep it. So intraday is something one day job. You do everything in the same day. Delivery based, you buy and you keep it. The thing is, you have some time perspective attached to delivery based trading. Now, why one should do a intraday trade? Why the buying and selling has to be done so fast and completed in the same day? There are certain reasons. Let's say that you are expecting a good result of Reliance, and then you want to go you want to go long on that, and you know that that company may not. Let's say that you assume or you have a perspective that Reliance is not going to give you a very good result in the long run, but since we are expecting a very good result in Reliance, that means that it will be at least higher for today. So once the result is out, we will see a very good move in Reliance coming. And since you are speculating that, since you are expecting a good move in Reliance just for the day, and you don't see a value in Reliance for coming days, so what you do, you just buy it now, and you just play for this news. You buy it, and once you have after a good movement comes, then you sell it, and you you take some profit. Also in intraday, you can short a stock and then buy it later. In delivery based, you cannot do that. So delivery based trading is always that you buy it and you carry it. You cannot short it and carry it. But then on intraday, you can short first. Short selling is basically you sell the stock first, because let's say that you believe that Dr. Reddy's result is coming, and there are some FDAs, there are some problems. Some US has raised objection on some of the plant of Dr. Reddy, and that is why you expect that the result, and because of the bad news, Dr. Reddy will go down. So what you do, you sell it at a higher price, and because of this news, let's say the impact is really backed on that, and it is started to come down, and then you can buy it later. So ultimately, the goal of a trading is to buy at a small price and sell at a large price. Now, by selling first at a higher price because you are expecting that it is going to go down, and then buying at a lower price, that idea or that motto is fulfilled, and then you end up in making a good profit. In intraday, you can short sell a stock. This sounds a bit strange, because for a lot of people it's difficult to understand that you are selling something which you don't own. But yes, slowly you will understand, and this will make more sense to you as you become experienced in trading. So for now, just assume that this is possible, and later when you do it, you go to the trading platform, you will see that this is actually allowed. So you can sell the stock first and then buy it later. So basically, what we learned today is, if there are two types of trading style mostly, intraday and delivery based. And in delivery based, there are a lot, like the swing trading. So swing trading is that let's say that you buy something and you keep it for some weeks, 1 or 2 weeks. That is a trading. That is a very short term duration. Then we have a short term trade. Maybe you keep it for 3 4 weeks. Then we have a medium term where you keep it for 1 or 2 years, and then we have a long term when we keep it for around 3+ years. So basically, this is just based on time duration that you divide divide delivery based trading. But then basically these are two forms of trading. This is how you trade it. So ultimately, what you do here is, first you decide that what asset you want to trade. After you have taken that decision, then you have to decide in which segment you want to trade. Either you want to trade in cash or derivative segment, and then you decide that what type of trade you want to take, whether you want to take the trade for the same day and not carry it the next day, or you find a stock valuable enough to buy it and keep holding it for some time. You give time to it so that it grows in its values, thereby increasing your profit. So that's it, guys. I will be uploading some more videos on that for starter, as a starter series, because a lot of newbies have requested me that. So I will keep updating that. I will take in my coming videos about future options, what is weekly options and how you should be trading it. Also, I will be talking more of because there are a lot of guys who have asked me that how you calculate margin and all those things. So all these things I will be taking care. So these all series will be very basic, and if you are already experienced, then you can skip it. I mean, it's your ways. You don't have to see all the videos that I make. If you are experienced enough, you already know it, then you can skip the video. That is also fine. So that's it, guys. If you have any further queries or if you have any suggestions that you want to make, you can write those in the comment section. And if you want to join my WhatsApp group, then you can ping me on the number provided in the description. Thanks for watching. Bye for now.